Hey, good morning. Euro strong for now. Up across the board, nothing but bid. Look at Euro Kiwi on the fiver. So Euro pound at a top, Euro Kiwi at a top when you're looking at pivots. Euro dollar at a top. First mover up. "30 minutes away from an ECB press conference. They're going to explain how they're going to handle the spread between the German bond market and the Italian bond market, or the Greek bond market, so on and so forth. Good luck with that. So these, to me, are probably all false tops. Well, while you're here, let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. Welcome to Forex.Today. I know it's an unusual time, but look, we had the event of the week. The next thing is the press conference, and I have that teed up. So once again, we talked about this, quite a while ago. But anyways, look, top, top, top. So you got to be careful. So you can't see it on this chart, but we know it's on the higher time frame. Look at that, huh? That's a 4 hour. Go to a 5 minute. I don't know. It seems like this was an important price. I don't know. Cool. So that's that. That's euro across the board. Just a quick look. Look at WTI today. I was long this for a minute. I bought it, almost there in fact. I bought it here and moved my stop to break even. And that was a wise choice. Ooh la la, so we're way back low again. So if you're a bear, you simply open up your indicators, changed your bias pivots to bearish from bullish. So there's bullish mode. I'll move it to bearish mode. I'll hit OK. It pulls up the sell zones. So the next sell zone is this. Now you can see I only have the aggressive target on. So let's update that. Bias pivots. Put this to true. OK. And there's the two targets. A tale of two targets. Okay. And that's for tomorrow's trade, which you will probably take today. Another way of looking at it, of course, is looking at this area and going pa-chow. Well, that's what the pivots are doing too, kind of. Cool. I would love to buy it, but I can't buy a lower low. You understand? I just cannot. Yeah, I don't like that. Let's delete that. Let's go insert indicators, custom, price action pivot points. And hit OK. And that doesn't look bullish to me because of the lower low. And I cannot buy a lower low. I only can buy higher lows or double bottoms. Your customer says, Wayne, what's your take on price limits for Russian oil that's apparently being discussed? It shows a level of incompetence and lack of understanding of how a market works. So the Europeans say, we won't pay more than this price. Okay, great. So they'll sell the oil to India. And then oil, right, that normally would go to India would then go to Europe from somebody else at the higher price. What, you got RFID tags on your liquid oil? So the weirdest thing is there's an embargo against Iran, for example. And you're like, what does Iran have anything to do with this? Well, normally China and India would buy the oil from Iran because they don't have the same embargo. But now if they have Russian oil, because Western Europe won't buy oil and gas from Russia, so it'll go somewhere. And you can sell it. It's like buying money. You can just buy it and sell it. So if you can buy it low and sell it to someone higher, you make money. So, right? So India will buy oil from Iran, as they always do, but they're also buying oil from Russia. So then oil shows up in Europe, and it would have been the oil that India got from Iran. But then they had excess oil because they bought all this cheap oil, and the rest of the world is willing to pay a high price. So then they sell it to Western Europe, but now it comes from India. Or the oil that normally would be bought by India would be, there would be this supply. So anyways, it's fungible. It's fungible. It just, you won't buy it from Russia, but you'll buy Russian oil from somebody else. Oil is oil is oil, right? So it's kind of ridiculous just to say, well, we're not going to buy it from Russia. Oh, you're going to buy it from Russia, even with an embargo. Or we're not going to pay more than X amount of money. Well, then Russia just won't sell it to you. You'll buy it at the higher price from somebody else. Like, it's so ridiculous. Okay? Think of it this way. Your boss walks into your office and says, I'm going to cut your salary. So you go across the street and you work for the competitor and get the higher price. You just leave. Because there is demand for this product, right? There is demand. You're like, screw you, I'll go get a job across the street, and off you go. Okay, anyways, oil down today, gold down today, silver down today, Coolio. Watch Brent. Okay, Brent is on the central pivot. Okay, that could be a stabilizing price, but I don't want to buy a lower low, so I'm just out today. Pig week. Remember, I've been selling pound. Wake up in the morning and sell the pound. Euro's reacting strong for now. Sweet. I had a plan for this. I discussed it in great detail with the day trading group yesterday. I said, yeah, the euro's going to get strong. Cool. Right on. I'm not going to buy it. I'll sell it later. I'll sell it later today. I'll sell it maybe tomorrow. Maybe I'll sell it next week. I don't know when I'm going to sell it. And I don't even know the price right now. I have some guesses. And that's what technical analysis will tell. I will identify some prices using technical analysis in which I would be interested. Maybe it's all the way at a monthly M4. Okay, or maybe around a monthly M4, I would be interested in selling it. Well, how do I know? Well, once again, things like price action would tell me. So if it went to monthly M4, which is the price, and then I got a reversal pattern, then I take a shot and I sell it off the top at resistance with a reversal pattern on a small time frame. So that would tell me the timing. When do I sell? When it produces a reversal pattern. At what price? Well, I only trade the reversal pattern if it's at obvious resistance. So resistance is the price, right? And the pattern is the price action. Sweet. So when is that going to happen? Well, I'll tell you when it happens, and then I'll pull the trigger. Price and time. That's it. That's all there is. CAD giving back. Yen super weak. All right. We've been selling the yen like crazy. The problem is the only thing with a bid is euro. And I had talked about that. It's just, I don't want to buy it. I don't want to own it. Okay. The other thing is the yen is weak, but everything else is weak. So nothing else is really moving. Okay. So we got this euro strength. You can see it here. But I think the more important news and what was discussed 2 days ago, okay, that where we were is an exit, not an entry. Okay, this is an exit, not an entry. So you wouldn't be in these anyways. And you can see over the last day and a half, they would have produced. You're buying it because it's going up now. You're paying too much for your asset because you're not doing any research and you have no strategy and no plan. You're just reactionary. Okay? If you wanted to buy the euro and you were aggressive, then a triple bottom would have been a heck of a lot smarter, or a higher low, or a higher low, or a higher low, or a higher low, or a higher low. But you're buying it now because of the news? My goodness. Now you're aggressive. Shame on you, would be my response. Now the news is coming out. Now we're at the weekly projected top. Now we're at the monthly projected counter trend target. Now you want to buy it? I hope that's not you. I hope that's not you. Okay? I hope that's not you. Okay. Anywho. But what is interesting is this is an out of position open. Okay, the training course says get ready to sell here. The training course says this is the likely target and you'll hit it early. And if you do, this is the likely counter trend. Cool. Cool. That's actually in the training course. We call that an OP trade, out of position trade. Cool. Cool. Now it's neutral. I don't know. But I have to think about it fundamentally. Did the ECB just save Europe? Greece is safe now? Italy is saved? Hey, Mario Draghi actually resigned today. He resigned last week and they rejected his resignation, but now he's out. So what? Italy's safe now? Greece is saved? That's it? We're all good? Everything's good? Thank you, ECB? Or do we still have a problem? Yeah, you know me. So anywho. Okay. So we got ECB meeting in 12 minutes and 18 seconds. What do you think about that? For some reason I can't pop it out. Can I pop this one out? No. Wants access to this site. Strange. Trying to get a plugin to work and it's not working. I don't want to have to reboot my machine. Well, we'll have to do this the old-fashioned way, and I just drag it across. Maybe I'll just change some options. Change anything? Probably not. Yeah, it did change something. Huh. I kicked it in the butt. All right. All right. How you doing? So once again, as we've been focused on for a few weeks now, is the continued weakness in Great British Pound. My entry was here on this one. Okay, there's my sell. And we're down here now, and my stop is here. So now I'm very interested, can we get through this level, which would require up, down. Huh? Now, what does the chart say? Because I've been in this for almost 2 weeks now. What does the chart say? Okay, my chart says S1, and that's why my limit order is down here. Okay, it's not like I'm trying to make 217 pips. I could put a little here, but the thing is I got to cover the spread, right? But the chart says this for the week. Okay, if you have this as a weekly top, the weekly bottom is here. And notice that that's tomorrow's daily target. So what the chart is saying is we hit today's target. You see it? It's marked. Pinged off of it perfectly. So therefore it's going to come up to 116. And tomorrow I'll be out for 225 pips. Yeah, boy! Base, huh? Base, how low can you go? My 98's a booming in my trunk with funk. Pound Swissy can't stop my dunks. So anyways, anywho, there's going to be some volatility associated with all of this. This is a sideways trade. Okay. And so it's quite range bound. So there was an opportunity earlier to sell it at the top of the range. That's why I have this marked. And now that the trend is dead, you must kill your Fibby. Okay. The bigger part of the range is down here. Okay. So I wouldn't even mind that we do something like this where you go bang, 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 bang. Which means if you don't have a trade plan and you're reacting, you're going to lose money near the bottom, and then you're going to lose money around the top, where someone else would just say, if it comes up here, I'll sell it. And this is their sell zone. They place those entries, and then they're done for Friday. So you might do that on Friday where you're like, oh, look, it's going to go down to an exit zone. So maybe around Sunday, Monday, it'll be back at 74.5, in which you will have a sell order. So you put your sell order there, you walk away, and you're done. And so if it works its way up, you're entered in here, and then this falls for a week, and you're like, Someone else without a trade plan is chasing this and then chasing this and then chasing this, and they're just all over the place. It's a lot of work, and it's a bloody mess. Peeing on your own blue suede shoes. Why are my shoes green? No comment. So, piggy, 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 can't you see? Take a look at the bigger point of view. Aussie's still relatively bid. Pound coming off. Okay. Great. Great. That's what I wanted to see. When it was strong, I ignored it. Cool. Aussie's still fairly strong. Kiwi's still fair, although Kiwi's showing signs of weakness. Okay. Yen coming down hard, but we've been selling that all week, so that's all good in the hood. But currently very topish. Dollar's giving back, probably because of this ECB meeting. And it's not that I would assume, but what I'm looking for between now and next week is that dollar changes direction and goes bid. Okay, up. Right, there's bid and ask. Bid is you're buying. You're buying, you're bidding, you're buying. Ask is you're selling, you're asking for money. Hey, I'll sell you this for money. Okay? So bid means you're a buyer. So when I say I'm looking for bids on the USD, what I'm saying is in the next probably 36 hours of trading, I'm looking for this to go from bearish to more bullish. And therefore, I'd probably look on a smaller time frame. So I'd zip over here and look at it and say, well, that's not up. Okay. But if you trap it like technical analysis, be very interesting if it rolled over. And it'd be very interesting if you got a reversal. Then all of a sudden, I'm a bid. I'm buying. I'm a buyer. I want to buy me some buck. Okay? But not right now. Pound just getting crushed. Okay? Euro doing great. Dollar just tanking. Wow. Cool. I'm out of those trades. Yesterday, I moved stop losses to lock in a bunch of profit. And got taken out of those trades. Cool. While I was sleeping. Sweet. We're just a few minutes away now. What happened to my floating player? Why is it not floating? Interesting. Well, James, interestingly enough, that's actually the terminology, right? So it comes from floor traders. Bid, ask. I'm a buyer. So imagine you're in the trading pits and they're doing all these signals. Okay? And so you might be a seller looking for bids. Of course, the question is, well, what are you asking? I'm asking for 200 at 38. You have 200 contracts at $38 or 200 shares at $38. Yeah, just like an auction. That's what it is. It is an auction. In fact, that's what we do. That's why I teach people to have trade plans and stick with biases. Okay? I said the euro is going to go up in value, but I don't want to buy it. Why? I don't want to own it. When you're at a car auction, you don't have to bid on every car. Maybe you didn't look at the car, so you don't know anything about its history. Maybe you don't like the way it looks. Maybe it's in rough shape. Maybe it's not running. Maybe you prefer other cars. You don't have to bid on everything. So this is going up, and I'm like, that looks like a Ford Pinto to me. Someone's buying it, and the price is going up. I'm like, good for them. I wouldn't pay that kind of money for a euro. Are you joking? I got enough problems in my life. Yeah, what a mess. What a mess. Why would I want to own that? Oh, it's going up. Okay, you might want to look at the Commitment of Traders report tomorrow. Well, actually, that won't tell. So you got to wait for the Commitment and Traders report next Friday, not tomorrow. The Friday after that, we'll report positioning after this ECB meeting. And you might find that what's happening all week, by the way, and I knew on Sunday to walk away from my dollar strength trades, right? Right? I did. I talked all on Sunday night. I'm like, normally I'm a buyer of dollar and a seller of euro. Not this week. I'm just going to sell the Japanese yen. Cool. Good call. But you might look at the Commitment of Traders report and find out that's what other people were thinking too. And you might find that there's less and less and less people selling euro, but no new buyers of euro. But that would drive the euro dollar or the euro index up. All right, we got Madam Lagarde. Man, that floating player just ain't floating. Now where'd it go? Strange. And why is it now? It's not even live. What's it doing? Or is that them? Did they start it and stop it? Hang on.
Good afternoon and welcome to our press conference.
This guy's awesome, huh? This guy knows how to party.
Good to see many of you here in the room again, and also obviously very welcome to those who join us remotely.
Calm down,
We're
ladies.
here on stage with President Lagarde and Vice President Beginners.
Yeah, there she is.
My name is Wolfgang Preußel. Later in the question and answer session, I would like to ask you to identify yourself, and if you are joining or if you are asking a question remotely,
This guy needs a hug, doesn't he?
your microphone, since we want to hear and see.
What would he do if you slapped him on the butt? He'd just
please.
die right then and there.
Thank you very much.
You
and
touched
good
my
afternoon,
buttocks.
to all of you. The
Anyway,
Vice
let's go.
President and I welcome you to this press conference. Today, in line with our strong commitment to our price stability mandate, the Governing Council took further key steps to make sure that inflation returns to our 2% target over the medium term. We decided to raise the 3 key ECB interest rates by 50 basis points and approve
That's a big
the transmission
move.
protection instrument that I will refer to as TPI. The Governing Council judged that it is appropriate to take a larger first step on its policy rate normalization path than signalled at its previous meeting. This decision is based on our updated assessment of inflation risks and the reinforced support provided by the TPI for the effective transmission of monetary policy. It will support the return of inflation to our medium-term target by strengthening the anchoring of inflation expectations and by ensuring that demand conditions adjust to deliver our inflation target in the medium term. At our upcoming meetings, further normalization of interest rates will be appropriate. The front-loading today of the exit from negative interest rates allows us to make a transition to a meeting-by-meeting approach to our interest rate decisions. Our future policy rate path will continue to be data-dependent and will help us deliver on our 2% inflation target over the medium term. In the context of our policy normalization, we will evaluate options for remunerating excess liquidity holdings. We assessed that the establishment of the TPI is necessary to support the effective transmission of monetary policy. In particular, as we continue normalizing monetary policy, the transmission protection instrument will ensure that our monetary policy
TPI.
stance
They just love
is
their
transmitted
acronyms, huh?
smoothly across all euro area countries. The singleness of our monetary policy is a precondition for the ECB to be able to deliver on its price stability mandate. The TPI will be an addition to our toolkit and can be activated to counter unwarranted disorderly market dynamics that pose a serious threat to the transmission of monetary policy across the euro area. The scale of TPI purchases depends on the severity of the risks facing policy transmission. Purchases are not restricted ex ante. By safeguarding the transmission mechanism, the TPI will allow the Governing Council to more effectively deliver on its price stability mandate. In any event, the flexibility in reinvestment of
Friends, it's very good to see many of you here in the room again, and also obviously
the pandemic. The decisions taken today are set out in a press release available on our website, and the details of the TPI are described in a separate press release that will be published at 3:45. I will now outline in more detail how we see the economy and inflation developing, and will then explain our assessment of financial and monetary conditions. So, economic activity is slowing. Russia's unjustified aggression towards Ukraine is an ongoing.
By the way, here's
drag
the
on growth.
research she's talking about.
The impact of high inflation on purchasing power, continuous supply constraints, and higher uncertainty are having a dampening effect on the economy.
You're welcome.
Firms continue to face higher costs and disruptions in their supply chains, although there are tentative signs that some of the supply bottlenecks are easing. Taken together, these factors are significantly clouding the outlook for the second half of 2022 and beyond. At the same time, economic activity continues to benefit from the reopening of the economy, from a strong labour market, and from fiscal
We
policy
now have a
support.
5-minute lower low.
In particular, the full reopening of economy is supporting spending in the services sector. As people start to travel again, tourism is expected to help the economy in the third quarter of this year. Consumption is being supported by the savings that households built up during the pandemic and by a strong labour market. Fiscal policy is helping to cushion the impact of the war in Ukraine for those bearing the brunt of higher energy prices. Temporary and targeted measures should be tailored so as to limit the risk of fueling inflationary pressures. Fiscal policies in all countries should aim at preserving debt sustainability as well as raising the growth potential in a sustainable manner to enhance the recovery. Inflation increased to 8.6% in June. Surging prices were again the most important component of overall inflation. Market-based indicators suggest that global energy prices will stay high in the near term. Food inflation also rose further, standing at 8.9% in June, in part reflecting the importance of Ukraine and Russia as producers of agricultural goods. Persistent supply bottlenecks for industrial goods and recovering demand, especially in the services sector, are also contributing to the current high rate of inflation. Price pressures are spreading across more and more sectors, in part owing to the indirect impact of high energy costs across the whole economy. Accordingly, most measures of underlying inflation have risen further. we expect inflation to remain undesirably high for some time, owing to continued pressure from energy and food prices and pipeline pressures in the pricing chain. Higher inflation pressures are also stemming from the depreciation of the euro exchange rate. But looking further ahead, in the absence of new disruptions, energy costs should stabilize and supply bottlenecks should ease, which together with the ongoing policy normalization should support the return of inflation to our target. The labour market remains strong. Unemployment fell to a historical low of 6.6% in May. Job vacancies across many sectors show that there is a robust demand for labour. Wage growth, also according to forward-looking indicators, has continued to increase gradually over the last few months, but still remains contained overall. Over time, the strengthening of the economy and some catch-up effects should support faster growth in wages. Most measures of longer-term inflation expectations currently stand at around 2%, although recent above-target revisions to some indicators warrant continued monitoring. Risk assessment. A prolongation of the war in Ukraine remains a source of significant downside risk to growth, especially if energy supplies from Russia were to be disrupted to such an extent that it led to rationing for firms and households. The war may also further dampen confidence and aggravate supply-side constraints, while energy and food costs could remain persistently higher than expected. A faster deceleration in global growth would also pose a risk to the euro area outlook. The risks to the inflation outlook continue to be on the upside and have intensified, particularly in the short term. The risks to the medium-term inflation outlook include a durable worsening of the production capacity of our economy, persistently high energy and food prices, inflation expectations rising above our target, and higher than anticipated wage rises. However, if demand were to weaken over the medium term, it would lower pressures on prices. So turning to financial and monetary conditions now. Market interest rates have been volatile as a result of the pronounced economic and geopolitical uncertainty. Bank funding costs have risen in recent months, which has increasingly fed into higher bank lending rates, in particular for households. While the volume of bank lending to households remains strong, it is expected to decline in view of lower demand. Lending to firms has also been robust as high production costs, inventory building, and lower reliance on market funding have created a continued need for credit from banks. At the same time, demand
Why
for
raise
loans
interest
to
rates?
finance investment has declined.
Well, they're trying to
Money
normalize,
growth
but look
has
at,
continued to
we
moderate
know
owing to
their
lower
interest
liquidity
rates are
savings
very low
and
compared to
lower
everybody
Eurosystem
else.
asset purchases.
But look how much inflation
Our
they have
most
relative
recent
to everybody
bank
else.
lending survey reports
Look at
that
Australia,
credit standards
way down here.
tightened for all loan categories in the second quarter of the year, as banks are becoming more concerned about the risks
Look at
faced
Kiwi.
by their customers in the current uncertain environment.
So are you trading in
Banks
this order?
expect to continue
Pound, yen,
tightening their credit
CAD,
standards in
yen,
the third
euro,
quarter.
yen, Kiwi, yen,
So,
Aussie yen, in that
Summing
order?
up,
Pound,
inflation
Swissy,
continues
CAD,
to be
Swissy, euro,
undesirably
Swissy.
high and is expected to remain above our target for some time. The latest data indicates
Cool, right?
a slowdown in growth, clouding the outlook for the second half of 22 and beyond. At the same time, this slowdown is being cushioned by a number of supportive factors. The Governing Council has today decided to raise the key ECB interest rates and approved the transmission protection instrument.
But is that
At our upcoming meetings,
that's what happening?
further normalization of interest rates will be appropriate. Our future policy rate path will continue to be data dependent and will help us deliver on our 2% inflation target over the medium term. We now stand ready to adjust all of our instruments within our mandate to ensure
You can
that
see that
inflation stabilizes
they're
at
not
our 2%
the same.
target over the medium term. Our new transmission protection instrument will safeguard
That's
the
not the
smooth
order of interest
transmission
rates.
of our monetary policy stance throughout the euro area as we keep adjusting the stance to address high inflation. We're now ready to take your questions.
Thank you, President Lagarde. And the first question today goes to Annette Weisbach of
I noticed
CNBC.
that. Hang on, I got to get.
Thank you very much. Good afternoon, President Lagarde.
Good afternoon.
My first question is on your forward guidance and what the front-loading means for September, because you previously has been guiding us and the market that September will see a 50 basis point hike unless there is a clear signs of inflation going down. Second question is on Italy. We are seeing yields rising with the political uncertainty at center stage. What's your message to the markets? Is the
screwed it up.
TPI big enough and bold enough to prevent a potential escalation of the situation? Thank you.
Well,
There we
thank you
go.
very much. And actually, your question helps me give you a bit of an insight of what happened during this really important Governing Council meeting. Governing
That's
Council
the order
members
now,
around
huh?
the table made two important decisions. The first one had to do with interest rate hikes by 50 basis points, and I will come back to forward guidance in a minute, and also decided to approve at unanimity of the Governing Council, the transmission
Those are more
protection
yields
instrument.
than
So let
anything.
me come back to the interest rate hikes that we decided, and I will come back as a result to you forward
So yields
guidance
are up,
question.
huh?
We debated internally within the Governing Council about the pros and cons of sticking to the signalled 25 basis point of July, which entailed the other forward guidance that we gave in respect of September, and the two of them were clearly a package. And having weighed the pros and cons, we decided on balance that it was appropriate to take a larger step towards exiting from negative interest rates. Okay? And we did that on the basis of several indicators, several elements, which we believe constituted a change relative to our June Amsterdam meeting. And I can come back to those four elements because I think they're important. They all relate to, materialization of inflation risks that we had flagged.
So you see
in
inflation
Amsterdam,
and interest rates
which we have seen
are not balanced.
materializing in the meantime. And I think the second important component that played a role in our decision was that the situation has changed in relation to transmission. We had not implemented yet the flexible reinvestment under PEP, and certainly we did not have at the time a transmission protection instrument. So these two elements.
So look at like Euro
combined,
area, Japan,
realization
Switzerland.
of upside risks to inflation.
Switzerland still has negative
plus
interest
the
rates.
presence and the operationality of the flexible reinvestment under PEP.
All very
And
low.
More importantly, the unanimous support of the Governing Council for the transmission protection instrument led us to decide a larger than what had been signaled.
Just
rate
trying to get you to
hikes
think
on
about
the
whether you're a
occasion.
buyer or not.
That is really what if you want to go sort of behind the curtain of the Governing Council debates. This is what took place. I would add that in relation to the rate hikes, we had the debate, weighted the pros and cons, and at the end of the discussion, all members of the Governing Council rallied to the consensus of 50 basis points. So it's a strong indication on both accounts in relation to the higher step that we are taking to exit from negative interest rates, and on the other front, which is making sure that our monetary policy stance is transmitted smoothly throughout.
Are you guys thinking about
euro area.
your trade strategies in that way? You're looking at the
TPI,
fundamental differentials?
Is obviously an instrument that will help us deliver on our mandate of price stability, bringing inflation in the medium term back to 2%. And under that TPI, all members of the euro area can be eligible, all of them. You will find in the press release later after this press conference the detail of the eligibility conditions. But all members of the euro areas are eligible. The Governing Council, in its discretion, in its assessment, will determine, on the basis of the eligibility criteria, on the basis of the indicators that will signal or not unwarranted, disorderly market dynamics, whether or not a country is eligible and whether it activates the TPI. Voila. Thank you.
Thank you.
Voila!
And the next question goes to Alexander Weber of Bloomberg. Alexander, please.
Yeah, thanks. Alexander Weber with Bloomberg. I wanted to
Look at
follow
it
up.
tanking.
Good afternoon, President Lagarde.
Oui.
Given that right now there's a very clear reason behind market reaction, do you see any way for you to buy Italian debt in the foreseeable future while arguing that market reaction was unwarranted, which would be the condition for the TPI? And then coming back to the September decision, is this really now the interest rate decision for September? Is it really completely open now, or do you still envision a move of larger than 25 basis points?
On your first question, as I have just described TPI, and I'm happy to come back to that in terms of eligibility conditions and
Should just put him in his
decision-making
place.
of the Governing Council.
Dude, I just told you.
TPI is a program that is designed to address a specific risk that all euro area countries can face. So all euro area countries
Don't
are
call
in
it
principle
YCC.
eligible to the TPI. Subject to what? Subject to being considered by the Governing Council as eligible to the TPI.
How about this one,
on
James?
the basis, notably, not exclusively, it will be the discretion of the Governing Council to make the decision, notably on the basis of criteria that are very specifically spelled out. If and when the TPI needs to be activated, obviously the Governing Council is going to conduct a thorough assessment of the situation in the affected countries, and the decision to begin TPI purchases, as I said, will be in the entire discretion of the Governing Council. Now, clearly, to assess whether you
One
have
way of looking at it.
unwarranted, disorderly market dynamics, the Governing Council will take into account multiple indicators to determine the warranted versus unwarranted and to determine the orderly versus disorderly. And multiple indicators have been discussed and will be taken into account by the Governing Council. You wanted to come back to September. That's a good point. I think I had addressed that issue with your colleague sitting next to you. I think what I tried to explain in my first answer is that in June we have signaled. It's not exactly what I said, by the way, neither in my blog nor in my Simtra speech, just in case any of you is interested, and very scrupulous and scrutinizes those documents. But at our Amsterdam June meeting, we signaled our intention to increase by 25 basis points. And that was a signal, a degree of forward guidance to that signal, that was coupled with the signal that was given in relation to September. Given the decision that we are taking today, which is to increase, and remember, Amsterdam, for those of you who have forgotten, was we intend to increase by 25 basis points, and at our September meeting, the incremental increase will be possibly larger than 25. And some of you have assumed that it might be 50. But we decided to go for 50 basis points hike in June, and therefore the combined forward guidance that existed for September is no longer applicable. I think if you go back to the monetary policy statement, you see very clearly that from now on, we will make our monetary policy decisions on a data-dependent basis.
You might like this.
We'll operate month by month and step by step. So what happens in September is going to depend on what data we have for September. But we are definitely on a normalization path, in order to reach our medium-term objective of 2%. So let me repeat again, because you seem to frown. We will determine in September on the basis of the data that we receive. And this is a projection exercise in September, remember? That will include all the national central bank in the exercise. So on the basis of the data that we receive at the time of those projections.
Don't just look at the headline, look at the differential. 3.5 to 5.1.
On the normalization path that we are taking in order to deliver on our medium-term 2%. Now, that doesn't mean to say that we are changing the ultimate point of arrival.
But the UK has the highest level of inflation.
And we are following the path of normalization that we have flagged. Thank you.
Thank you, President Lagarde. The next question goes to Franziska Cruz of...
Look at it coming down. Just lovely. Love it. Love it. Oh, my God.
Thank you for having my question, which is the following. How will the ECB decision on the interest rates affect the retail investors in the medium and long term? More specifically, I'm wondering what kind of effect it will have on just a normal private person that is in the market and now wondering what this will do with his or her money.
Well, first, we are moving all three interest rates by 50 basis points. So obviously, the cost of funding,
right on, Richard.
banks and the cost
Appreciate
of
the
credit
feedback.
for
That's
those
cool.
Who borrow from banks is, assuming good transmission, which I do, given that we have a transmission protection mechanism and that we are very attentive to that, will go up. That's pretty obvious. And why is that actually beneficial at the end of the day for those in the retail sector, for those consumers, for all economic agents? Is that the most precious good that we can deliver and that we have to deliver?
Well, it's not just that, Jim.
Stability.
It's that
so
this
we
can
have to bring
continue.
Inflation down to 2%.
Like, what did I say last night?
That is
Up after the press conference and then maybe down for 3 weeks.
Review objective that we have set for ourselves, and it's time to deliver.
Thank you. And the next question will turn to WebEx and goes to Francesco Canepa of Reuters. Francesco, please.
Yeah, good afternoon. So my first question is whether you are going to
just like that,
TPI purchases
up on Thursday, down for 3 weeks.
Whether you are going to sterilize them. So,
I don't know why I keep losing my floating player.
If so, how?
Huh?
It's very good to see many of you.
Okay, thank you very much for your question. As far as publication is concerned, publication will take place in due course according to publishing principles and rules that we apply. Okay, so that's answer to your question one. And as far as the other question is concerned, I would just like to clarify that
Yes to waving.
if TPI is activated,
FXBootcamp.com.
it will avoid
It's
interference
$88
with the
for
appropriate monetary
65
policy stance,
hours of training videos.
and we will address the implications of TPI purchases for the scale of
Start
the
there.
aggregate Eurosystem monetary policy debt security portfolio and the amount of excess liquidity. I'm not going to go through the details of exactly using which mechanism, sterilization or otherwise, that we would be using. These are practical matters that certainly have been discussed, have been agreed, but if you don't mind, the transmission protection instrument is intended to facilitate, enhance transmission of our monetary policy stance in particular circumstances that we will address, and the ECB will be capable of doing that. And the ECB is capable of going big for that.
Thank you, President Lagarde. And I'll take another question from WebEx, and this one goes to Tonia Mastrobuoni of La Repubblica. Tonia, please. Tonia, we can't hear anything. Can you hear us, and can you unmute, perhaps? Doesn't seem to work. I will come back to you afterwards. So I would like then to go to Martin Arnold of Financial Times. Martin, please.
Thank you very much, Madame Lagarde. Back in March 2020, you said that you were not here to close the spreads. Does this transmission protection instrument mean that you are now here to close the spreads? And will it be used to counter the increase in borrowing costs that we've seen in Italy as a result of the political uncertainty that's developed there? Thank you.
Thank you very much. You give me another opportunity to clarify exactly what TPI is about. TPI is going to be an addition.
Dude, when
to
you
our
have to explain
toolkit.
yourself this many times, people
And
don't
it can
like
be
what you just
activated
announced.
to counter unwarranted,
Like, we don't get
disorderly
it.
market dynamics
It's not going to work.
that
What are you
pose
talking
a
about?
serious threat to the transmission of monetary policy across the euro area. And why do we do that? Because we want to make sure that we deliver on our mandate. We want to make sure that our monetary policy stance is transmitted throughout the entire euro area. It's not the only tool that we have in our toolkit. We have two existing tools already. We have, number one, PEP, and in particular the flexible reinvestment of redemptions, as we announced back in June, which is now operational. So the flexible reinvestment of PEP is operational, and it allows us to deal with unwarranted fragmentation risks that are created as a result of pandemic risks. We have OMT, which gives us a tool to deal with unwarranted impairment to transmission that are caused by redenomination risks and that are country-specific. And now we have TPI that I have just described in order to counter unwarranted disorderly market dynamics. So we have the three instruments in the toolbox, and they all can be operated. As I have said, and I will repeat, TPI is a program designed for specific circumstances to address specific risks, but that is available to all countries of the euro area, because our concern is that monetary policy is transmitted throughout the entire area. So when the Governing Council will determine that a country is eligible under the 4 criteria that I'm happy to come back to, and on the basis of the indicators that there is disorderly market dynamics, then it will decide that that country is eligible to TPI. It will activate. And as I said earlier on, there is no ex-ante limit to that program. Now, I'm happy to go to the 4 specific criterias of you is interested, maybe I will. Yeah. So there are 4 of them, and I think it's important that we understand that on this occasion, like on any occasion having to do with either monetary stance or monetary policy transmission, the ECB determines in its own discretion, not being hostage to anyone. So the 4 criteria that it will use will be indicative, will be elements of information that it will take into account in order to make its decision. So the first one is compliance with EU fiscal framework. And that can take one of 2 forms, either not be in excessive deficit procedure or having failed to take the effective action in response to Council recommendations. So that's on the fiscal framework. And obviously it borrows from the other European institution, which is both the Commission and the Council. The second is the absence of severe
Yield on the 10
macroeconomic
years coming down
imbalances.
with this.
And again, it's from other European institutions in relation to the excessive imbalance procedure. The third is fiscal sustainability. So this is making sure that the trajectory of public debt is sustainable. And to do that, the Governing Council will take into account analysis by the European Commission, by the ESM.
Yeah, Henry, they're
by
going to
the
have
IMF,
to
by
raise
other
even more than that,
institutions, but
right?
it will certainly be together with the ECB internal analysis. And fourth, sound and sustainable macroeconomic policies complying with the commitments, recovery and resilience plans for the RRF and the European Commission specific recommendations in the fiscal sphere under the European semester. So you have a combination of criteria ranging from fiscal...
So if South Africa is paying
to,
5.5,
compliance with the RRP...
I can lend Mexico for 50% more money.
So all these 4
And I don't think there's
categories will be taken
50%
into
more
account by
risk
the
with
Governing
Mexico.
Council, but once again,
In fact,
the
I'd
Governing
argue there's
Council
less risk than
decides
South Africa.
in sovereignty in respect to eligibility to the TPI.
South Africa's got a long ways to go. They better hurry up.
Thank you.
Thank you, Madame Lagarde. And the next question goes to Aude Kerselec of the French television BFM TV. Aude, please.
Thank you. Good afternoon, Mrs. Lagarde. The hypothesis of a total gas cut from Russia...
The next
by
meeting's
this
coming
winter
up. This is
is
way
more
back
and
in
more credible.
a month ago.
You just spoke about,
So Mexico's going to
downside
jack it up
risk,
over
and
8%.
Some institutional studies show that this will lead to recession and raise energy costs again. That happens, will this be a signal to reverse monetary policy and become accommodative again? What could be the reaction of the ECB?
Well, thank you very much for your question. But as you know, the primary mandate of the ECB is price stability, which we have defined as the 2% inflation medium term. And what we observe is on the outlook front and on the inflation front, and we try to assess what are the risks to both.
So you guys watching
We see
bond
downside
yields?
risk to growth. I've explained that in detail in the monetary policy statement and made specific reference to the unjustifiable, unacceptable invasion of Russia against Ukraine and consequences as a result of it. And we are seeing upside risk to inflation, particularly in the short term, but you know, sort of spreading. So, as ECB, what we have to do is act in relation to inflation, given the circumstances. That's what we're doing. To your question about the impact of gas,
This is what currency
it is
traders
clear
do.
that energy prices play a critical role
Because you're really
in the
buying
high
bonds.
inflation numbers that we are seeing that are undesirable and that we will unfortunately
You can
continue
borrow
to see
from
for some time.
Japan
So we are very attentive to what happens on
for
the
almost
energy
free.
front, and in particular on the gas
And
front,
buy
because it has an
New
impact
Zealand
on electricity
bonds.
price, as we all know. So
and get almost 4%.
most recent evolution concerning the
Minus
gas supply through
your
Nord Stream 1
cost.
in particular is
So 3 and
obviously a
3/4%
factor that we take into account.
That's all you
And
need to
the
do as
decisions
a
that have been announced
as a
by
trader.
the European Commission in
Borrow
relation
from
to,
Japan, lend the money to New
savings,
Zealand.
in relation to solidarity, in relation to inventory, are also taken into account in relation to the role that energy plays.
Borrow from Japan, lend it to Australia.
Inflation, but also
You have to
obviously in
buy a
relation to
10-year
growth.
T-note,
So we are very
10-year
attentive
Australian
to all
bond.
these
That's what
factors.
you'll get.
Is that going to lead to a
You can
recession?
borrow cheap and lend it to the United
We
States.
look at our projection dating back to June. We look at the most recent forecast published by the Commission last week.
That's what we
And
do.
at the baseline
That's how money
scenario,
flows.
There is no recession, neither this year nor next
Oh,
year.
where'd you go?
Is the horizon clouded? Of course it is. Thank you.
Thank you, President. And we'll try it again with Tonia Mastrobuoni of La Repubblica. Tonia, please.
Well, then it's a little less profitable.
Yes, hello.
Would you do it for only
hello, Madame Lagarde.
3.5%,
Sorry,
Patrick?
I couldn't cope with my technical problems.
Sure.
Good afternoon. I have two questions. The first,
Wow, look at
I
her
would like to go
apartment.
back
She's
to
like a
Italy, of
college kid.
Because it's not only a question of debt. I mean, how worried are you about the
She's got a
the
record
collapse
player,
of the
though.
Draghi government, also due to the fact that Italy will become a large part of the next generation EU, which should fuel also the
She's
the,
got a
the
futon.
growth in
That's
the Eurozone.
amazing.
And that this his reform path, and so also the next generation EU money it receives could be interrupted by this political crisis. So also threatening the growth
That's right, Milos.
outlook in
Just
the whole Eurozone.
right. Anyways,
My
look at the
second
euro
question,
coming down.
I mean, very often in the
Hey!
the rises of
Just like we said
rates
last
in
night.
government bonds were caused by political crisis.
Lovely
If I'm
Tulium.
not wrong, you mentioned the 4 criteria, and Italy would meet these criteria at this moment. But this is, of course, a crisis which is
It's almost 100 pips down from the top.
reason, by political cause, a government crisis, self-inflicted by Italy.
Nice.
Would you think that this could be considered as an unwarranted rise of interest rates on the government bonds if it went on? The spread is already rising this morning. Thank you.
Well, thank you so much for your question. Let me just remind you that the ECB does not take a stance on political matters. Political matters are for the democratic process of each and every member state. And that is certainly the case for
Sounds
the country
big,
that
fella.
you're referring to.
That sounds ridiculous.
Differences
Oh my
in
gosh.
local
Well,
financing
congratulations, dude.
can legitimately arise, among others, due to the country's specific macroeconomic
Would you bet half your
landscape. That has
account
happened in
on
the
one
past.
trade?
So, the Governing Council will make the assessment of whether a country meets the eligibility criteria or not at the time when it has to make those determinations. And it will do so having a sort of threefold
Yeah, it's not
assessment,
the
if you will.
leverage, though.
First
It's
of
the
all,
size of
it
the
will
trade
determine
relative to your account.
a comprehensive assessment of market and
Yeah.
transmission indicators. There's a
Oh,
whole
man. Well,
range
congratulations,
of
but
such
I don't like it
indicators.
at all.
Second, it will at that time evaluate the eligibility criteria. And third, and that's very important, it will have to make a judgment call that activation of purchases under the TPI is proportionate to the achievement of the ECB primary objective. Now, those of you who are familiar with the legal requirements and with the concept of proportionality will have understood what I mean by that, but this is obviously operational in relation to any activation decision that is being made.
What's up, Bones?
Thank you, President. And now the next question goes to Pablo Rodriguez of El Mundo. Pablo, please.
I love the
Thank you very much, Madam.
gray tie,
I have
gray
a couple
suit. I
questions,
did
if I
that
may.
when I
The
spoke
first
in
one is that
China.
14 years ago, one of your predecessors here, when there was a rise in the rates, he dismisses the argument that
40 years ago?
Sorry? 14.
Oh, okay.
14 years ago.
14.
14.
Okay,
one
okay,
four,
okay.
yeah. He said he dismisses the argument that the rise would put further strain in the peripheral countries. And he said, I don't buy that argument. I was wondering if now you kind of buy that argument, because in a sense, this new instrument you are announcing, even though it's just an extra one, basically those criteria describe pretty well those countries in problems that 14 years ago may need the help of the ECB. So do you think that the economies are more resilient right now, or just an instrument as it is, it will help them to compensate the effects of the new rate? And the second one, if I may, is the Spanish government has announced a new tax on banks for windfall profits. I was wondering, because they explain they do that because of the interest rates rise. And I was wondering if you have an assessment, you will eventually have an assessment, and you have an opinion as you have in the past, because it has happened before in other countries, and I was wondering, you think it's actually a good
Right on, Goldie.
after what it has been announced, or just because of what has been announced today here? Thank you.
Thank you so much for your question. I think your second question will be addressed by my colleague, the Vice President de Guindos.
Well, good afternoon, everyone. Well, it's very difficult to give an opinion when you do not know, the concrete details of the tax. We do not know the characteristics. We do not know whether it will be a tax on profits. It will be a tax on assets. So it's, that's the first thing that we have to say. We do not know the details, and so our opinion cannot be complete in that respect. What I can tell you is what has been our policy line in the past with respect to taxation of banks. No? And if you look at our opinions in the past, they are quite clear. What they try to make quite explicit is that the tax should not impair credit extension, credit growth, because this is important for economic activity. Second, that we should try to avoid any sort of tightening of financing conditions for households and corporates. And finally, that the tax should not damage
my pleasure,
the solvency
Anurag.
of the banking industry. This has been always, in the opinions that we have produced in the past, it has been always, this kind of message to the governments. But I repeat again, we do not know the concrete characteristics and features of the Spanish tax that has been announced, as you have said, by the Spanish government, and so in order to have a much more concrete and specific answer and response and opinion, we will have to wait a little bit.
Yeah, and to you,
it's very good to see many of.
because in the monetary union, there is an inherent risk, particularly the monetary union that we have here in the euro area. There's an inherent risk that a large shock can create fragmentation risks. And that can lead to self-fulfilling market dynamics that are not warranted. And it matters for the singleness of our monetary policy in our monetary union. But those impediments can have different sources. And that is the reason why we have several tools. As I said earlier on, we have the flexible reinvestment of PEP, which has been deployed, is currently operational. We have OMT, which was decided back then for another unwarranted
Becky.
Disorderly market dynamics, but having to do with more country-specific
Thank you,
matters.
Joseph. Thank you, Richard.
And closely associated with the redenomination risk, because that's really what it was designed for at the time, if you remember. So we were short of this particular tool, which is the one that we have in front of us, the transmission protection instrument, that is not related to redenomination risks, but to the unwarranted disorderly market dynamics that can impair the proper transmission of monetary policy throughout the euro area.
How many people like the fact that I could just grab the interest rate
no
differential of all the major currencies that we trade, both at the central bank rate and at the bond market rate, where I can just show you GDP growth comparatively to everybody, or that I can just show you inflation rates versus everybody and just be able to knock it out in seconds, so that you can organize your thoughts around currency trading. How many people like that can be done?
So that's what we have done. And I can assure you that we would rather not use TPI. The Governing Council would rather not use it. But if we have
Would
to
you pay
use it,
$50 a month so you could do it yourself?
we will not hesitate.
If it also organized
Thank
the
you.
trades for you?
Thank you. Next question goes to Roland Koopman of the Dutch television channel RTL. Roland,
Thank you,
please.
and good afternoon, Madam President. I'm over here.
Where are you?
I'm here, to your right.
Oh.
All right. Okay, I've got two brief questions. Your previous forward guidance to this rate decision is about 5 weeks old. Yet the rate hike decision is a lot bigger than anticipated. Did the monetary conditions in the Eurozone deteriorate that fast, or is the agreement on TPI giving you the ability to go further than you anticipated? Second question.
What if it organized it like this
you're
for
on
you?
the path towards normalization. What's
Interest rate differential,
interest levels are
unemployment
considered
rate, inflation
normal,
rate, GDP
by the
growth,
ECB?
trend, seasonality, retail sentiment,
very
commitment
much.
to traders report, scoring them, and then organizing
we
them into
decided
buys and organizing them into
by
sells.
Total consensus around the table.
And it was doing it
to
in
depart
real
from
time.
the signal that we had given back in Amsterdam was twofold. Number one, we had clear realization
Would you pay $50 a month for
upside
it?
risk to inflation, and I can give you a list of those examples. Inflation going from 8.1% in May to 8.6% in June, way above our forecast. Seasonally adjusted month-on-month inflation rates that show strong inflation momentum for nearly all components. Number three, a broad range of indicators of underlying inflation that have continued to increase and pipeline pressures that are rising to record high levels. And added to that, which relates essentially to inflation, the euro-dollar rate that has fallen substantially.
You'd find
in
that
the
helpful
last
if it organized all your thoughts
weeks,
like that?
which obviously has a bearing on inflation going forward. So it's on the basis of that set of monetary policy related, monetary policy stance related elements that we have taken the decision. As I said, twofold, inflation related, and second, the fact that the concern that we had about monetary policy transmission is addressed by, number one, the deployment of the TPI, the PEP flexible reinvestment policy, and second, the unanimous support of the entire Governing Council to a strong and powerful transmission protection instrument that I have just described earlier on. So on the stance front, we had good reasons to revisit, and on the transmission, we are confident that the existence of that mechanism, its ability to be deployed, is actually reinforcing our capacity to deliver on our price stability mandate and to walk that journey.
So if you said, "Oh, I should buy CAD yen," and you clicked on it, it opened a screen like this,
going from the signal 25
showing
to
you
the 50 that
the
you are
entry
seeing
area,
now,
the stop
is
loss,
a
conservative,
higher
aggressive
step
stop losses, profit
out of
targets,
negative interest rates. So we are
showed you
moving
the
in one go to
seasonality,
zero. Does that
the
mean
breakdown
that we are,
of the
changing
scoring,
the
GDP
terminal
growth, inflation
rate at
growth,
which we
employment
want
growth,
to
interest
arrive?
rate growth,
No.
differentials
Does
between
that
the
mean
two
that we are going
commodities.
to move extremely fast?
So now
As
you
I
know
said,
why it got to be
we
a
will
buy.
be operating
That'd be worth $50
month
a
by
month.
meeting by meeting, on the basis of data, and we will.
It says
adjust
not
and
only should you
calibrate
buy it,
accordingly.
but these are the
We are
15 different
much
reasons
more
why it's
flexible
better
in
than
that
the
we are
other
not
thing.
offering forward guidance of any kind. I was asked several times the questions about September. There is
Well, the
no
thing is, I got to
guarantee
put
about the
thousands of
September,
dollars down
but the
to make
ultimate
that data
destination of our
available to you,
policy path
so I need to
remains
know.
the same, which is to progressively raise interest rates to broadly neutral setting. That's where we want to arrive at. Okay? And if you're asking me next, what is the neutral setting? At this point in time,
All right, I think I'm
don't
going to
know. What
kill
I
it.
can observe is that
She said
it has
everything she
changed
needed
over
to
the course
say.
of the last
They have
few
this
years.
new
All these
awesome
factors having
program.
to
It's
do
got a
with
cool
demographics,
acronym,
productivity and all
and
that.
it ain't going to work.
And as
And
seen
that's
by
what I
markets,
talked about
has
yesterday and the
also
day before, and I
significantly
talked about it
adjusted
on
in the
Sunday, and I
last
talked
few
about it
weeks.
last
So
Thursday at the
we
swing
will
trading
cross
group.
that bridge when we cross that bridge. Thank you.
Thank you. And the next question goes to Christian Siedenbiedel of FAZ, Frankfurt Allgemeine Zeitung.
Yeah, Madame Lagarde, do you think this is a historic moment Are you personally glad that the
Trying
time
to
with
find
the
out where
negative
the-
interest rates is over now?
Oh, here it is.
I tell you something. I think it's a rather historical moment for me, at least.
I don't know where this thing is playing. Oh, there it is. Cool. So, yeah, so they got a cool new program. It's not going to do a damn thing. And, yep, it went up, hit our exit zone, and totally collapsed. So now it comes down to what do you want to do next? Well, for me, I want to sell high. Cool. So that's how you do it. Cool. So today is my swing trading group. We meet once a week to plan out next week's trades. Okay. We meet once a week to plan next week's trades. How cool is that? So we typically look for trades that produce about 300 pips, maybe more. Something we can stay in for days. Something that's got meat on the bones. Cool. So we meet at 4 p.m. By the way, it's $99 a month to be in that group. I don't think that's expensive. But there you go. It's priced, I think, reasonable. The meetings are usually about 3 hours. We often do group work. So it's very interactive. Not only do members do group work, but then there's like group presentations, and then you get feedback from me. So it's a really interesting event. It's not just me burning through charts and throwing down trade ideas. Okay, you will improve as a currency trader. Cool. So I look forward to these events. So for everybody in that group, I'll meet you at 4 p.m. today. Am I calling trades? It's not, no. Well, I mean, imagine this, Robert. We spend 3 hours discussing trade plans and trading ideas and the rationale and the setups. But is it me calling trades? No. That's too simpleton. If you want someone to trade for you, you can just do a copy service. I'm sure you can sign up for some sort of alert service. I can also tell you, right? I can also tell you when you do things like look at copy services. I was looking at one yesterday. Was it MyFX book, I guess? I looked at their most popular, right? The ones that have the most subscribers. I looked at their trading history, and they're horrible, in my opinion. Horrible. So there's no one going to save you. So I'd rather teach you how to make your own decision. Okay? You join fxbootcamp.com, John. It's $88 a year, and then it says, hey, do you want to upgrade your account? Okay. So we do group work, Robert. I'm trying to tell you, you learn. You will go in an amateur and out less of an amateur. Okay? You will learn how to make your own decisions. Again, you're not just listening to me firing off trading ideas. You're doing group work. There's group presentations. You're going to learn how to think. We do fundamentals and technicals. But once again, you can just go to like MyFX book and follow some other person. The best ones out there are using every trick in the book to look good. They look profitable. They're up hundreds of %. They make money every month. But when you do a simple calculation like a Sharpe ratio, the best of the best of the best on that site doesn't even compensate you for the risk they take. So from a professional point of view, it's not good. It's just not good. And those are the best. And then they do all kinds of things. Like I was looking at one, I'm like, wow, it does look pretty consistent. I looked at the trading history, and it was like it plus 50 pips, plus 80 pips, plus 30 pips, negative 40 pips, and that kind of stuff. I'm like, okay, that's actually pretty good. They're taking reasonable losses. They have reasonable wins. They're not scalping. I'm like, okay, this is pretty good. But then I'm adding it up, and it's not very many pips at the end of each month, but they're up 4 or 5% every month. And I'm like, what? So then I organized the trades by lot size. And every once in a while, they go from a few mini lots to like 6 standard lots. And they make the vast majority of their money on giant gambling type trades where they have 6 standard lots and they make 30 pips and it provides a 10% return. I'm like, oh my God, fail out. So once again, right? So here's the way I handle this, right? Robert, there's nobody on this planet that's going to save you. Unless you got legitimate money and you can hire a real professional. So you got $5M to put down, $5 million into an account. Well, then you'll get a licensed and registered professional trader. But if you got no money and you're going to take an alert service or you're going to sign up for some copy thing, it's just an amateur failure. So I'd rather teach you how to think so you can take care of yourself, because nobody gives a damn about you. You need to take care of yourself. You need to take care of your family. You need to make the big decisions. You need to be the boss. And hiring an alert service or a copy thing for $50 a month so that you can get rich that way is not logical thinking. It's just not logical thinking. And so doing this for 20 years, I've turned away from that opportunity. I'm sure I can sell you an alert service and make money. But that's not what interests me. Okay? So anyways, have a wonderful day, everybody. Please pray for Madam Lagarde. And everyone in the swing trading group, I'll see you at 4. Everybody else, I'll see you in the AM. Oh, if you're in my day trading group, remember we don't meet tonight, but you will meet with Ryan at 2 o'clock in the morning for the pre-European Open. Okay. Okay. Great. Nice. So, peace on earth. May the pips be with you. May our profits be above average. That was real.